So if I were to ask you, where would you invest $100,000 for me? Well, you guys loved the video that I made before with Tanner Fox asking him for him to invest $100,000 for me. And I gave him the 3 options of those blue chip stocks. Now, we're gonna take things a little bit differently this time. In this video, I'm labeling him as a TikToker. If you guys don't know his name is Tyler James. He has 1 million followers on TikTok, but he is, again, so much more than that. He's also big on a bunch of other social media platforms. He has a big focus on fitness, and he is also not the worst thing to look at. The really great thing about Tyler James is he's super young and super motivated when it comes down to not just growing his online presence, but if I'm not mistaken, he just closed on his first property in Gilbert, Arizona. Let's give him a round of applause.
Sure. Thank you very much.
How old are you?
I'm 25.
25. Dialed in. Again, one of the most difficult things that anyone ever has to do is the idea of potentially purchasing a house. I could at least speak from my experience. When I decided to buy my first house, it was a very daunting experience, but after you get that first one done, it's like cakework, right? I thought it would be pretty interesting to allow him to decide out of 3 stocks where to invest $100,000. So again, if you guys like this video, all you have to do is smash that like button, and of course, consider subscribing as I upload new videos every single day. And on my next video, what stock do you think we should invest in? So one of the things that I like to do within this video is first explain to Tyler how it is that I see value, right? Because I'm not going to just allow him to decide to invest $100,000 blindly, but out of these 3 stocks, how it is that I would go about it, right? And I am taking a different approach. The last time they were very conservative blue chip stocks. This time, these stocks might be a little bit different. You might know some of them, you might not. So we're going to start off with the 3 different stocks: Facebook, Dick's Sporting Goods, and Carvana. Do you know all 3?
I do.
All right. So you're also a golfer, so you know Dick's Sporting Goods,
Yep,
right?
Of course.
Facebook, come on.
Absolutely.
Carvana. What's one fact about Carvana?
It is, man. I mean,
It's one of the most valuable companies in Arizona, as in the person that owns them is the richest person in Arizona. I don't know if you knew that. And their dad is like the 2nd richest, something like that, right?
Wow.
Imagine you being the richest and then your dad's like, yeah, I'm right there with you.
Jeez. That's
right?
crazy.
Yeah, not bad. So I'm going to be talking about the 3, and I'm going to be sharing with you how it is and why it is that I selected these 3 stocks. Let's start off with Facebook. I like to keep it short and sweet. Facebook is a blue chip stock. It's a great quality tech company. And the thing that I like to focus on to keep it very short and sweet is I like to put my money in stocks that consistently indicate signs of an uptrend over a long period of time. I'm not a perfect trader. I'm not a perfect investor, and you might not be either. But one thing that we always can have in our favor is the market direction. And the market on average grows from 6 to 7% a year. And especially something like tech, Facebook has been absolutely destroying it. Don't even just look at the day chart in the past year. You can look at the week chart and look for the past 5 years and see how bullish it's been from $17 all the way up to highs of $384. The direction is in my favor. I want to invest in companies that are consistently showing signs of growth. The great reason that I'm bringing up Facebook right now, because it's not just about knowing what stock to buy, but knowing when to buy it. You can see that Facebook hit highs of 384, which is great. That's a great understanding of what Facebook can hit. But it recently pulled on back. I don't know about you, Tyler. Do you like to overpay for things?
No.
No. I mean, I'm a deal hunter.
Yeah.
I like to focus on good deals. So the way that I always view these things, and you might already know, is I like to wait for pullbacks.
Yep.
So I like looking at the big picture. I like to focus on direction. Check, right? The direction is in my favor. I like to focus on consistency, making sure that this stock isn't all over the place, that it has a consistent pattern. I really like how it's consistently trading above the SMA line or the moving average, this green line that you see right here.
Yeah.
Now, I like to focus on a good deal. So now this meets all 3 of my criteria, which is why it's one out of the 3 stocks. Sorry for stuttering. But from 384, it pulled on back to lows of 326. Some of you guys might be like, well, Ricky, that's an expensive stock. One thing that a lot of beginner traders or beginner investors confuse themselves on is they focus so much on the price per share, but what's actually important is the percentage return that it might have to offer. It doesn't matter if you buy one share, it matters what percentage return that stock offers. You can buy 1,000 shares of a stock at 1 penny, but if it only offers a 10% return, you can buy one stock that offers a 10% return and just buy one share. A 10% return is 10% return. It doesn't matter how many shares of it you can buy. What matters is the percentage return. And from where we're at right now, if it were to make a full recovery, 13%. That's if it plays out to be a perfect trade. And that just is if it recovers to 384. But looking at Facebook's track record, it continuously makes higher highs, higher lows. And what are we approaching right now? Well, Facebook is one of the largest marketing platforms. And as we're entering Q4, guess what's super expensive right now? Facebook ads. And all these businesses are gonna pour hundreds of millions of dollars into Facebook ads. So Facebook tends to have a very strong performing Q4. That is more on the fundamental side. I just wanted you to have an understanding of what I'm looking forward to. So I don't expect Facebook to recover right away. My intention is I don't mind putting money in it right now because of the potential that I see it to recover and continue to make new highs. 13% ROI, it's at a potential support level. It's already indicating signs of a reversal. And have you ever heard about the 3 stages of a reversal?
Briefly.
Okay, so I've talked about it before, especially with my Learn Plan Profit group. The thing that I really like to focus on is a lot of people like to buy a stock when it's selling off. But guess what? When a stock is selling off, it could continue to sell off. So that's kind of a risky play to take.
True.
So that's why I view it as a high risk. Consolidation is good because it begins to indicate signs of a potential support level, but it can still sell off, which is what I view medium risk. I like to buy and really step on the gas, meaning going all in when the direction is in my favor. Again, the very simple concept of I like to put money in stocks that are indicating signs of growth. And looking at how Facebook sold off, it consolidated and now it's recovering. I view this to be from step 2 to step 3, where it's going from consolidation to a potential confirmation. Okay. A goal is something to work towards, not something that it has to play out, but that's why I view Facebook to be a bullish stock that's consistently bullish. And then the last thing, it's a good deal that's indicating signs of potential uptrend. I have all my alerts set here as 13% ROI, and that's why I view it to be a decent stock worth looking into.
Awesome.
That's Facebook.
Cool.
Any questions about it?
Nope, you covered it all.
All right. Dick's Sporting Goods, DKS. All right. So this is a pretty funny stock. A lot of you guys might not know, right, about this company, but it's a sporting goods store. It's like Big Five Sporting Goods if you're familiar with that. Very bullish, very similar to Facebook, but it's not like a blue chip stock like Facebook. It's not as popular. It's not tech. It's retail. But again, we're entering Q4. Huge retail season. And as we pull back, a very similar pattern. I like to focus on 3 things. Direction, in my favor. Consistency, consistently bullish, check. Deal, recently pulled on back, indicating signs of a potential reversal, check.
Yep.
Do you see kind of the similar characteristics that this has to Facebook with its pattern and its direction and its consistency?
Yep.
That's what I like to focus on. So from where we're at right now, if it were to make it full recovery, 18%, almost 19%. But if we surpass that and we have a strong Q4, again, this isn't a return that I expect to see next week. This isn't a return that I expect to see next month. It's over a period of time, but I'm okay with that. The only thing with this is that, again, it's not Facebook. It hasn't been as consistently bullish for as great of a period. So the way that I would view Dick's Sporting Goods is I would view it to be a little bit riskier because it's not as of an established company, but it offers a greater return. From 13% of Facebook, 18% to almost 19% of Dick's Sporting Goods. That's a pretty significant amount.
Yeah.
All right.
Absolutely.
The last one. I don't know why I'm so passionate about Carvana, but I love it. I think it's just because I'm into cars. You're into cars.
Yeah.
We're just into cars, right? They're in Arizona. We're in Arizona. Where are you from?
South Dakota.
Yeah. What's in South Dakota?
A lot of horses.
All right. Well, Carvana. This is what it looks like if you look at the overall big picture, right? Yep. 2018, 814, all the way to highs of 376.
Wow.
Okay? Looking at it on the day chart, we can see that it recently pulled on back, It's testing just like it did before it continues to rally. Do you see that characteristic? That's what I like to pay attention to. When it pulls back, how it pulls back. When it begins to recover, how does it begin to recover? And the way that it's doing it right now, like, do we have confirmation? Does it make sense to buy now? And what's the ROI? You ready for this one?
Yeah.
From 302, if it just recovers, that's 24%.
Wow.
You want to know a fact about Carvana? Again, this is just because I'm really into it. Carvana in 2020 was the second largest used car dealership that sold the most cars in the United States, of over 214,000 vehicles in 2020. You want to know something about Carvana? They don't have a physical location, to my understanding, of where you buy them and pick them up. They get delivered to your front door.
Really? I did not know that.
It's a new type of dominating and disrupting the car market.
Yep.
That's why they're performing the way that they are.
Wow, convenience.
It's crazy, right? And I remember hearing about them and looking into them when I was looking for an R8 a couple years ago, probably 3-4 years ago. And to see how they've been absolutely killing it, I think maybe that's why I find them to be so inspiring.
Yeah.
From where we're at right now, again, I wouldn't view this to be as an established company as Facebook, as consistent as Facebook, but it's still bullish, it's consistent, and it's cheap based off of previous highs.
Yep.
So from where we're at right now, if it were to make a full recovery, 25%. So again, the most conservative approach, Facebook, best established company, right?
Yep.
Then we have DKS, Dick's Sporting Goods, entering Q4, huge for retail. This one's about 19%. And then we have Carvana, right?
Oof, yeah.
Okay.
Interesting.
What do you think about them? Like, what do you like or don't like? Like, do you feel like what it is that you know, at least on the technical aspect, right? Because if any news were to be shared about any of the companies in a negative way, that's a, outside catalyst that could drop the price of any stock, right?
Yep.
But what and how do you feel if you had, $1,000 of your money, where would you invest it?
That's tough. I love Facebook because obviously I'm on social media and I'm so strong into Facebook. Is obviously they own Instagram as well. So yep. I'm huge on Instagram. So it's hard to veer away from Facebook. With Dick's Sporting Goods, I have always been into sports. So
yep.
That attracts my attention again there. But I feel like the retail game is slowly going away. But
okay.
That's just my opinion. And then Carvana, I feel like there's a lot of potential there, and there's a lot of convenience with Carvana.
Yep.
So that also really intrigues me. If I had $1,000 of my own money, I would probably go with Carvana, to be honest with you.
Yeah. Do you like it because it offers an attractive percentage return, or do you like it because Facebook is obviously the more conservative route?
Yes.
I would
absolutely.
view Carvana to be a little bit riskier.
Yep.
Do you feel like because of your age, you're okay with taking that risk?
And that's why. If I was quite a bit older, I probably would go with a Facebook play, more conservative. But since I'm 25, I'm kind of in that younger era of my life, I'd probably go with Carvana and go with the risk.
All right, so by the time that this video is posted, you should be able to see my actual screenshot here of buying $100,000 worth of Carvana stock. Again, at the end of the day, it is your job to educate yourself on and when a company is worth investing. And this is something that we love covering within our live trading sessions. I trade live every single morning with our Learn Plan Profit group. And I would even like to invite you, if you've never tuned on in, this is for people that have never tuned on in. If you're an absolute beginner and you just want to see what it's like to watch me trade live, I'd love to invite you to our next live trading session. My Instagram is actually down in the description. You can message me. Just message me, live trading. I want access to tomorrow's live trading session. Just a heads up, markets only open Monday through Friday, so I'll give you access to the following live trading. But at any time, I respond to all of my messages. Make sure you message me right now, live trading, if you want to see what it's like to watch someone trade live in the stock market. So I'm excited to follow up. We did really well with the plays that I invested in when it came down to Tanner Fox's video. So we'll see if I actually come out in the green or if I'm going to have to, again, manage or mitigate risk. But that's the beautiful thing about the stock market, is that it is challenging, but it's our job as traders and investors to manage and mitigate that risk. So I'm excited to follow up with you guys. I hope that we earned your thumbs up in this video. I hope that you really learned something new. Make sure that you give Tyler James a follow. His information is going to be down in the description as well. Please consider subscribing. I upload new videos every single day. And like always, let's make sure that we end the year on a green note. Take it easy, team.